company. This one we configured. Okay, 2-minute recap. So what we discussed that day, we discussed all this TR and system landscape and all, and we configured this company, which is there in the table T880 and WM00 we have created. Now I'm going to create the company code. Same, continue enterprise structure, definition, still financial accounting. Credit control area, this one I will explain while doing the accounts receivable. Next, company code. So what is company code? Company code is the smallest legal entity. And for this, that means company is optional, company code is mandatory. For example, let's say we are having only one operation. We don't need any consolidation, all these things. Then we can continue with company, we can continue with only company code. Company is not required. But company code is mandatory because once the FI consultant will define the company code, other consultants, they will assign, because everything we are going to assign company code from operation point of view. So click on here. We can copy the company code or we can create the company code. Okay, right now I will not recommend to copy, because if you copy the company code, not only complete configuration will be copied. So we don't have a chance to do the configuration our own. So if you want to copy, just I'm showing you, but go for your own configuration. EC01 transaction code, click on copy this one. Take the source company code, take the target company code, click OK. Everything will be copied. Leave it, we will not copy. Edit company code data, new entry. Add the company code. So this one I'm taking WM10. Give some description. City. Select the country. So all these settings are there in the NetWeaver. That's why we are getting in the drop down. Add the country. So you know how to search it. Currency. This currency, what we are going to define here, that is your company code currency, also known as local currency. We have one dedicated topic for currency. That time we will see in detail. For the timing, you take this company code currency. Then in which language you are going to maintain? English. Maintain the address. Region is your state. What in NetWeaver, for each country we have the states are there. So whatever the country will select, accordingly the region will come. Okay, for example, if we'll select here India, then Indian states will be there. So select the state, other informations, contact information, all we can maintain. Save it. I will not create a new TR for this. I will save the same TR. So go to own request. Select this one. Okay, it's created. Now this data is available in table T001, and here the field we this is your view KRS company we added in Arcom, which is maximum 6 digit, but view KRS is 4 digit. Let's verify this one. So you can get this, go to technical setting, table T001, field name BUKRS, check the settings of BUKRS, 4 character, length is 4, maximum, that's why company code is 4 digit, company is 6 digit. And you can see here, it should be there in your same transport request. Two things are there, company and company code. Both are not yet released. So company created, company code is also created. Okay, so from table, if you want to verify the data. Okay, let me assign, then we will go to the table. Now we want to maintain a hierarchy like company under this company code. So this is your assignment of company code to company. So under one company code, we can add multiple, sorry, under one company, we can add multiple company code. So you can add same group, you can add a new company code, okay, and you can assign to the same company code. So go to assignments, financial accounting, assign company code to company. This one, assign company code to company. Click here, search your company code and company. Okay, done. Now let's verify from the table. Which table? Company code T001. Give me 1 second. So detailed informations are there, and you can see what is the company WMG00. That means company code assigned to the company. So this is the organization structure. Like we have created company, we have created company code, and also we have assigned this company code to company. Okay, now we have one concept, although it is not nowadays, almost we removed this concept, but still like I need to explain. What is business area? Can you tell me what is business area?
Business area is like one product or one field. So, like Procter and Gamble have multiple products like that. They have one area with one area of head and shoulder. So I think that's business area. Am I wrong?
Anything can be business area. Whatever you said, that is also correct. So anything can be business area. Business area, we can take product. Business area, we can take operation. Business area, we can take, in fact, let's say location also we can take business area. Here in earlier we used to configure the business area, but after the profit center and segment, we are getting more detailed report and accurate report by using when we will go for reporting point of view from compared to business area and profit center. So that's why nowadays either some companies they are using functional area or they are using the profit center. But still, let's say we will create business area. Assume that we have plant in 2 location. Okay, unit 1 and unit 2 under the same company code. We have 2 plants. In future, we will add the plant, but right now, let's say, so we have a plant in Phoenix, and we have a plant in Greenville. So in future, we are going to add the 2 plant, and this one we are taking unit 1, and this is where we are taking unit 2. Now, what is the benefit of, okay, where we will configure this business area? If you want to configure the business area, enterprise structure, definition, financial accounting, here you have the option, define business area. Click here, new entry, take something. So already this unit 1 and unit 2 is there. So once again, I'm not adding, but this business area, so many business area there, and all business area is created at client level. So any business area we can use with any company code, which is quite confusing. Any business area we can use with any company code, because there is direct no hierarchy. That means we are not going to assign the business area to company code. Like we assign the company code to company. Similarly, we are not going to assign the business area to company code. Now, if you may ask, like, if we are not going to assign the business area, then how it will be linked, right? So different options are there. One option, manually you can select at the time of posting, manual selection. That means directly select the business area. For example, we want to post any document, any transaction. So what is your company code? If I will take your company code, it will not work because other settings are not there. So let me take a different company code. Let's say, okay, give me 1 second. Okay, this is one company code. So in this company code, I can post the transaction by selecting that business area. Okay, so I will click here. What is the business area? Unit 1. Okay, I selected this one manually and I can continue the posting. Same business area I can use with a different company code also. So let's say it's a different company code, but we can select the same business area. This is one option. Here problem is, if you go like this, maybe user will select with the wrong business area and a wrong, let's say you are having 2 company codes, and one business area is not anyhow linked with one company code, but all the settings at client level. That means company code is at client level, business area at client level. So there are chances that they can select or they can post a wrong business area. So instead of that, we can also assign the business area with cost element, but not directly. Business area, we are not going directly connecting with the cost element. Business area, we can link with cost center. Then cost center can be linked with cost element. Okay, then automatically business area will come. Okay, let me show you. Same company code. I will not select any business area manually. So I will select a cost here. Right now you don't know the concept of cost element. For the timing you can take it's, let's say, GL number. So I will select the ledger here. When controlling it is cost element. Let's say I will select this one. Okay, I'm getting other error. 1 second.
Pradeep.
Hello.
Yeah, Pradeep. One question.
Yes. Yes.
Business area and the controlling areas are same or different?
Controlling area different, business area different. Controlling area for everything related to cost calculation, we are using controlling area. Business area, internal part of anything. For example, let's say you have 2 sales office, one you can take business area. Controlling area is much higher level. It is there, part of something organization structure. Business area is not part of your organization structure. It's internal.
Okay. Okay. Fine.
In fact, business area concept is nowadays almost it's removed. Okay, now see. Now I'm getting the business area automatically. I'm not selected in previous step. We selected the business area manually, but here we have not selected the business area automatically. But how this business area picked? First system picked the cost center. So cost center is linked with, we entered this one, the GL. Okay, in ECC, the GL is converted into cost element. I don't want to make you confused. You don't know this concept of cost element. So I entered this GL. GL linked with your cost element. Then cost element, cost center linked with the cost element. And business area is linked with cost center. Now it is automatically. This is one option. So one option is you can select the business area manually. Another option, you can link this with in a different way. That means through cost center or cost element. And for example, if I am going to take a revenue item, so also we can create some derivative rules for business area selection. Okay, so all these options are there, business area, but again, business area is quite confusing concept. So that's why SAP almost dropped this concept. And in new configurations, we are not using, because profit center, as I told, profit center segment will give you more a clear picture. And here we have the entry view, GL view, all these options are there. So now we will use both profit center as well as take this business area unit and unit 2 also. Okay, so for the time being, what the things we completed, we created the company that day, then we added the company code, then we have not created all these 2 business area, but we are going to use these 2 business area. Then other organization structures related to logistic general, related to So in different time we are going to add. Okay, because you can see under definition, financial accounting is there. Then CO related also we are going to add. We are going to work from this logistic general, SD and also. Okay, so but right now everything is not possible. So step by step we will continue. Next, coming to global settings. So you can see here first 2 financial accountings are there. One is financial accounting and one is financial accounting new. If in any client new GL is activated, then you will find 2 of these options, financial accounting and financial accounting new. What is new GL? We have multiple sessions are there for new GL. We can say this new GL, that means some advanced features are there. That is the ledger concept, leading and non-leading ledger, then parallel accounting and document splitting. So these are the additional features you will find in the new GL. Not only these features, we are going to use this in FICO integration. We are going to use this one in asset accounting. So right now in ECC, you have the choice. You can work on classic GL or you can work on the new GL. Whereas in S4HANA, it is mandatory. That means new GL activation is must. Every client, they have to work on the new GL. For example, if I will go to the S4HANA system, there you won't get 2 options, right? You just check. That means it's mandatory. New GL activation and new GL uses is mandatory. See here. Now, no more two financial accounting is there. It's only one. There is no concept of classic GL here because it's already activated, and here new GL is mandatory. So what is this classic GL and what is the new GL? We will see when we will take the this configuration of new GL. So for simplicity, I will first work on the classic GL. Then once you are familiar, the next we will start with new GL, or we can say initially 3-4 sessions we will be on classic GL. We will see. Then we are going to add the new GL part. Okay. So first of all, in this client, how can we will confirm new GL is activated or not? So new GL is activated in this client. So we can verify. New GL is active. Maybe you will use this feature or not, you will not use the feature, but new GL is active. So that's why two options are there, financial accounting and financial accounting new. If we'll compare this one, in financial accounting, what are the things we are going to discuss that we know? Different submodules are there. Just compare this financial accounting global setting. Here also financial accounting global setting. That means whatever the configurations are here, the same configurations are also available here in global setting new, along with some new configurations. Here you won't get the ledger, here you will get the ledger. Then when you are working on GL, this is GL, this is GL new. Similarly, when we are going to work on asset, so here the new GL concept is also applicable. So as we are going to work on the new GL, better to skip this part. Because if it is set, this is your subset. So by default, all these configurations are available here, all the steps. So in material also, I have given this financial accounting new, which includes both classic GL and new GL. Okay, so I'm going to use this option. I will not use this one. But whatever the configuration we will do here, you can verify here. If you go to use this node, you will find the same settings. So in global setting, first thing is fiscal year variant. So right now, irrespective of whatever the application right now you are using, whether it is ERP, non-ERP, whatever, we need one mandatory settings, that is your accounting year. Okay, so accounting year we are saying, and here in SAP we are saying this is fiscal year. So why the fiscal year is required? Okay, for example, today I will post one transaction. So I will take the current date. It is 14th May 2018 or 13th May 2018. So if I will post the transaction, where the system is going to reside this transaction, or where system will include this transaction? Each transaction should be there in one financial year. So that means it is 2018 financial year. Then each transaction is linked with some period, posting period. So that means you can say this is your financial year and this is your posting period. That means each financial year is divided into number of posting periods. So why this settings is mandatory? For reporting purpose. That means you need to finalize the financial year so that we will calculate the profit and loss, and we need to record the transaction in the proper period. So that means our financial year is 2018. When we are going to define the financial year, or that is fiscal year, nothing but in SAP, what is the concept of variant? I will explain. For the timing, you concentrate on fiscal year. So each fiscal year is divided into, that means we can take one fiscal year in calendar format or in non-calendar format. Okay, calendar and non-calendar. So in calendar, as I told, each fiscal year is divided into number of posting periods. So that is how many posting periods you will take, that depends on your configuration. requirement, but statutory requirement is monthly reporting or monthly posting period. That means 12 months. So if you're going for 12-month posting period, then one period equivalent to 1 month. One period equivalent to 1 month. So if let's say hypothetically, I'm saying, let's say we will go for a quarterly posting period. So each posting period is combination of 3 months. For example, you have taken first period. So first period is January, February, March. Second period is April, May, June. Like this you can take. But best practice, we are going to use 12 posting periods. So that means 12 posting period will be there. Not only 12 posting period, we will take some additional periods. That is maximum we can take here for special periods. What is the need of the special periods? For adjustment entries. What are the adjustment entries? Let's say, okay, first let me tell you this one. So that means if you're going for calendar year settings, so your posting periods may be January to December. That means you are going to take the first posting period as January and last period is December. It's default. If we'll go for non-calendar, there is no standardization is there. So in non-calendar, you can go for April to March, like we are following in India. Maybe in some African countries, you will find July to June or June to May. So there is no standardization there. So we need to go for some more settings if you are going for non-calendar year. So non-calendar year may be anything. Okay. So in each financial year, so we are following US settings. So we will configure the calendar settings, but I will take one non-calendar, that is for non-leading ledger. So I will configure two fiscal year variant, one calendar and one non-calendar. So we understood 12 posting periods required. What is the need of these special periods? For example, our closing date is 31st December. So after closing the books of accounts, then we will start the audit. And during audit, we found some adjustment entries. Adjustment entries may be related to some missing entries or some, like let's say rectification entries are there, or even due to some stock adjustment. Let's say material ledger is not yet closed. So we have to do the variance analysis. For due to this, we have to increase or decrease the stock revaluation account. So all these adjustments, where we will put, we can put this adjustment in 2019, but next year after closing the books of accounts, so your 2019 financial year is now active, and accordingly you have activated the posting periods also. So that's why for this adjustment entries, that means after closing the books of accounts. So for example, let's say imagine, let's say some 4th August. Okay, when you are posting the transaction, if you'll go to here, this posting date is current date. So assume that on 3rd of January, that means this date is 3rd January, and we found some missing entries which is related to 4th August. So that means your document date is, let's say, assume that 4th August 2018, but right now we are in 3rd January 2019 or 3rd February of 2019. So how we will post this transaction, because your normal periods are completed and we have closed the books of accounts, and these entries we suppose not to enter in 2019 because it is pertain to 2018 financial year. So in that case, we are going to use the special periods. Maximum special periods we are going to take here 13, 14, 15, 16, maximum 16, but it's not mandatory you will take 4. You can take 2 also if required. Maybe you are thinking like these are the months. That means it is January, February, March, April something, or February, April, February, March, April. No, these are not the months. These are the posting periods which are assigned for different adjustment. For example, this 13 we can assign stock revaluation. If any stock revaluation entries will be there, we will activate the 13 special period. If it is 13 posting period, means it's not the normal period, it is the special period. 14, let's say we can assign, let's say some adjustment entries. Okay, so when we will post the transaction, we will This document date will be the invoice date or something you can take here, but this date should not be 3rd January or 3rd February of 2019. So this should be definitely, if we are posting a transaction for the adjustment period, this should be 2018. And this period should be whatever the transaction you are going to post. Manually will select or automatically do the configuration, but it will be there. So it should be maybe 13. So stock entries will be there, or 14. And this date, definitely it should be the last working, so that it will reflect in the current year, sorry, previous year. Because if we are in 2019, then it is the previous year transactions, it will reflect in 2018. So that is the use of special periods or for adjustment entries. So that means we are going to define here 2 fiscal year variant, one for calendar format, one for non-calendar format. And in both cases, I will take 4 special periods. In fact, SAP is also providing the standard configurations. You just use it directly. Why? Because this is known as fiscal year variant. What is the concept of variant? Variant means variable. That means you configure once in one client and you can assign this to multiple company codes. For example, we are having 3 company codes and all are based on US. So configure one fiscal year variant and assign to assign to multiple company codes. No need to create 3 fiscal year variant. If it falls on same platform, that means all are coming under the calendar settings. One company code related to India settings, then you have to create a non-calendar. So that's why SAP is providing this standard fiscal year variants. Directly, you can use this fiscal year variants like K4, V3. So you can use with your company code, or you can copy it, or you can configure your own. We will configure our own. And this fiscal year variant should be 2-digit. So I'm using this one, but if you'll use this financial accounting also, absolutely no issue. Right now, whatever the configuration I'm going to do here. Okay, better we will use the financial accounting new. So go to ledger. No, sorry, fiscal year variant, then fiscal year variant and posting period. Transaction code OB29. Maintain fiscal year variant. Already so many configurations are there. Already different users they have created. You just ignore. Okay, you can see here. K4 is there, which is for non-calendar. Sorry, calendar. Okay, and V3 is there. It is non-calendar. We will create our own. Click on new entry. I will take 2, W1 and W2. Provided that it should not configured with the same credentials. W1, okay, it's there. W1, W2 is there. Let me take W5 and W6. This anything we can take, but already someone created. So I'm taking this is W5 and this is W6. New entry, W5. Fiscal year variant. Take this as leading. That means we will assign this to company code, because as it is created at client level, so next we need to assign to the company code. So that's why just for identification, I have added here leading, and number of posting period 12. Special periods up to you. So I'm taking 4. Save it. Create one new TR. Fiscal year variant. Global settings. Okay, it's done. Next, create one more, W6. non-leading, $12.4. If it is calendar year, then it's very simple. System automatically identify your first posting period is January, last posting period is December. If it is non-calendar, then you need to define your details. Okay, so we need to maintain one more table here. If it is non-calendar. So it is month, days, period, year shifting. Okay. So assume that in non-calendar, we are going to follow here April to March. So we'll start from April. So this will be April or fourth month from calendar. From calendar, it is fourth month, which is our first posting period. Before this, let me show you two documents. You will identify why this is important. Okay, let me show you two documents. This is one transaction we have posted and in one company code. This is also another transaction we have posted. Both the transactions are GL transactions, right? You just see here. What is the financial year? 2018. What is the posting period? 4. What is the posting date? 18th April. That means this particular transaction was posted in the system on 18th April and automatically system took the 4th posting period because it is April entry. Here also it is 2018 financial year. Posting date is same April, 2nd April, but posting period is 1. Okay, now you can see. That means in this format, our year starts from April and it will continue till April 2018 to, it will continue till March 19, right? Here it starts from Jan 18 to December 18. This configuration is simple. No need to know adjustment, further settings are required because parallelly in system also we have one inbuilt calendar is there and which is by default it is calendar settings. But when you will go for non-calendar settings, then additional settings are required. So that means user will post the transaction if in month April, it will be reported in first posting period, not on fourth posting period because we are going to follow here April to March. Year shifting not applicable. Like this May, and here how many days you are going to take? It's not mandatory we will take 30 days. Sometimes if we'll go for year dependent, it may be less. So 30 days, let's say 31 to see. Like this, if we'll go for December, sorry, it's 12, then it is 31 days, then period is 9, year shifting 0. Okay. Next, January, 31 days, 10th posting period. What I will take here, I know you know the configuration. What I will take here?
+1.
+1 or -1?
+1, I believe. Oh, wait. We will take 2018 to 19. This should be +1, right?
April to March.
April to March.
Okay. Let's take one example and we will see. Take one timeline. First of all, this concept is applicable in case of non-calendar. In case of calendar, it is not required. So in this, we will take system calendar. Here, take the company code calendar. I mean, company code point of view, which is statutory requirement is April to March. Transaction posted on January, as per system, January 18, system will consider this is first posting period of 18. Any transaction posted in February 18, system will consider this as second posting period. Okay. April 18, system will consider fourth posting period. As per calendar, if any transaction posted on April, then system will consider as fourth posting period. Whereas from your reporting point of view, or as per your statutory requirement, this should be first posting period of 2018. Like this, December 18, which is 12th posting period of 2018 as per system. But as per the statutory requirement, it should be 9th posting period 18. Up to December, there is no issue because in both format we are in 2018 only. 2018 like year. If we are following calendar year, we are going to close the books of accounts on December. If we are going to follow non-calendar April to March, then we have still 3 months are there. 1, 2, 3. January 19. So January 19, system will consider this one. First posting period of 19. Like this is your second period of 19. Third period of 19. And this one, 10th, 11th, 12th. Okay, so that means any transaction, if you're going to post on January, it should be reported in 10th posting period of 2018, not 19.
So it's mean -1 then.
Yes.
Yeah, I get it now. Yes.
Yes, this is the logic. So this is 11th posting period of 18, like this. So 10th financial year of, 10th posting period of 2018, 11th posting period of 2018, and 12th posting period of 2018. But when user will post the document, so right now, for example, we are in the 2nd January or 3rd January. So when we will come to this screen, you will find your date, your posting date is 2nd January of 2019. So that means this date we suppose not to change. This is the current date, but we will do some adjustment so that in system we are going to plug the data as it is, but it will be reported in 2018 financial year, or it will in previous financial year. So only to adjust this 3 months, we need to shift it one step back. That means from 2019 to, we need to bring it to 2018. Okay, so that's, if it is 0 point, then it will be -1. That is the concept of year shifting. So that means this will be -1. 11th. Now what I will take, -1 or 2?
So if it's year shifting, then it's -1, right? But if in point of months, it's like -2. I don't know. Like how are we gonna do it?
-1 only. We are not doing the month shifting. We are doing the year shifting.
Yeah.
If we take -2, then it will go to 2017.
Yeah.
Okay, so it's always the -1 or +1. So this is the concept of year shifting. Okay, now this additional step we need to configure. Save. Here no further settings are required. This is non-calendar. Select. double click on periods, new entry. 4, maintain this. Period 1, year shifting not required. 5, this is 31 to 6, 30 days. 3, 0, 31, 4, 0. That means any entry in the October, it will be 7 posting period. November 30 days, 8, 0. December 31, 9, 0. January 31, 10th, -1. -1, 12, -1. Save. Okay. Then 2 more important concepts are there. Let me tell you simply. Then in
Sorry,
next
I
session.
have one question.
Yes.
Question.
Yeah, please go ahead.
About our special periods. Okay, we have 4 special periods. So posting period always be the last month of that year for those special periods.
No. Posting date is always the last working date. 31st December or 31st March. Posting date.
Okay.
Posting period, what you will take, that depends on what type of transaction you are going to do. If it is, let's say we assigned 13 to stock. So if you are doing some stock adjustment, then it will be 13. Some missing entries,
okay.
rectification entries. If you assign 14, then it will be 14.
Yeah, posting date always be the last. Okay.
Last
Okay.
yes. And only it will report in the same financial year. Okay. You can see here, one is there year dependent. So in which situation we will take one case study on this. So year dependent means, for example, first of all, this indicator we need to activate if it is a fiscal year is that means it is a short-end fiscal year. Okay, so then again you will ask what is the short-end fiscal year. So I need to explain that. Let's take this year dependent. First of all, this particular settings what we did, this settings is only a one-time activity. That means you configure once, then year after year we will use this settings. But in some situation you need to repeat this step, or consultant needs to repeat. In which situation? One hypothetical example. For example, your client is asking, we need to close our books of accounts, supposed to be the last working date, but we want to close our books of accounts on last Friday, every month last Friday. So that means in this case, for example, let's say 27th is the last Friday. So they want to close their books of accounts on 27th. So for them, the month-end activities or month-end date will be 27, not 30th. So that means you are going to maintain here days as 27, and this is related to, let's say, 2018 settings. In 2019, it will be changed. So these 3 days will be added to the next month. Okay, let's say here it is 28. So last Fridays in May, it is 20 on 28th from the date point of view. So 3 days from previous month and 28 days from here. So that means it becomes the 31 days, or let's say it is 30 on 20, it's 27, right? So 3 days from previous month, 27 days from this month, so it becomes 30. So that means like this, if you are going to maintain, so every month you need to maintain your data or this fiscal year variant. So in that case, you need to activate it is year dependent. It's mandatory. And if you are going to maintain shortened fiscal years also, then that is also you need to activate the year dependent. So what is this shortened concept? It is very important concept. I will take one case study here, okay, and we will understand, because it is very, very important concept, the shortened fiscal. In which situation we will use the shortened. Okay, it's most of the people, they're thinking if we'll go for shortened, then maybe our primary fiscal year will not be there. The primary fiscal year will be the shortened fiscal year. No, it is required. Let's say acquisition merger is there. In that case, maybe we can use, or maybe we can use this one for asset accounting, or maybe we can use this one for planning purpose, right? So planning data in CO that we can take, or depreciation in asset accounting. These are the some areas where we can use the shortened fiscal year, but your primary fiscal year variant will be as it is will be there. But in some situation, along with this, we can add a financial year and all, like shortened fiscal year. Okay, this one we will take in next session. Now we need to assign this to our company code. Now we have two fiscal year variants. Which one we are going to assign to the company code? As per the current settings, we are going to assign this one to our company code. What about this one? This one right now we will keep it reserved. Once we will create the non-renewing ledger, and we will assign this one to our company, not company code, because company code is already assigned this one. This one we will assign to the non-renewing ledger. Okay. So next step, OB37. Assign company code to fiscal year variant. Search your company code. What is our company code? WM10. So assign it W5. Note it somewhere. This W6 also in future it is required. W5. Save. So let me tell you what are the things we have already configured. Next session, we will continue with shortened fiscal year variant. So far we have completed this organization structure, not the complete one. We have created company code, company. We discussed the business area. Then we assign this company code to company. Then credit control area we have not discussed. Business area we discussed. Then okay, this one not done. Then we discussed, you just ignore this one right now. General ledger accounting new. We discussed this finance fiscal year variant. This one we have completed. Okay, assign company code to fiscal year. So this one we have completed. So you have not had server access, so it's not good. We will proceed. We will. So any question? Rajesh, do you have any question?
No questions, Pradeep.
I have one question, Pradeep. Sorry. Like our payroll is bi-weekly. It's like 26 period in a year. So it's going to be a non-calendar. I don't know. Like, you know what happened? Sometimes it's end on 27 December or 28 December, the Friday, right? So 26 period. But anything we earn after that, we report it to the next year. I don't know. It's such a confusing.
And that means you are saying that your closing date is 27th.
No, it's 26 periods. Whenever it ends in the year, like it's bi-weekly and it's 26.
No, that is different one. That is different concept. See, that means I got it. You are saying that your payroll processing on 26. Like your employees are getting salary on 26th. So that's what you're saying, right?
No, sorry. I should clear it. It's like bi-weekly. We get payroll every after 2 weeks. So in a month, we get two pays.
That means, yeah, in 15 days, you are getting pay.
Yeah, after 2 weeks, right? So it's 26
But that is internally a HR processing point of view. Your financial year or your transactions you are maintaining with the same, either it will be weekly or it will be monthly. That is a different thing. This one is a different thing.
Oh, okay. All right. Okay. In a financial point of view.
Yeah.
Okay.
Financial point of view. Right now, what we are discussing. It is related to your maintaining the books of accounts and preparing the profit and loss and balance sheet.
Okay.
It is nothing.
Sorry.
But yes, yeah. But still, some companies they are maintaining. Right now, how many posting periods we have? 12 posting periods. If we'll go for 15 days, then 24 posting periods will be there. 15 days.
So how many special periods we can have? Actually, my question was like, can we have like 8 special periods or
special periods? Maximum you can take 4. Maximum.
Even though it's like a 15 and
Whatever,
Like,
that is up to you. But your special periods will be 12 one, 4 only.
4. Okay.
Okay.
Okay. Good. Thank you.
Okay then. Anything else?
No, that's it for me. Thank you. Thank you so much.
Okay then. So Anand, do you have any question? Are you there? Okay then. So we'll continue in next session.
All right.
Hello,
Okay,
Pradeep.
see you tomorrow.
Yeah, Rajesh, please go on.
Pradeep, one question.
Hmm.
How can we map up the GL and the cost center? As you did recently, that you selected the GL and the system pick up the cost center automatically, right?
Right.
Right.
Right now
So
in
about,
ECC concept is first you create the GL,
Mhm.
then convert the GL into cost element.
Okay. GL and the cost elements are the same.
Not same. Like, okay, at a glance, when you are saying this, you are saying that it is same, but it's not same, because GL is part of FI, and when you are creating the GL, we are updating two tables. One is your SKA1 chart of account segment, and another one is your SKB1. Okay, so right now what we are doing, first we are creating the GL and we are converting the same GL into cost element, and that means we can say we are activating two more tables. So this is CSK chart of account segment and CSKB, that is controlling area informations. Okay, let me show you one. Maybe you have 50 ledgers are there, but out of 50, all are not cost elements. So those ledgers are converted into cost elements. Those are only part of your cost element, or mostly you are saying those are related to operation, whether it is revenue or cost. If it is related to operation, we are converting into cost element. Okay, let's see. So take this one. For example, let's say it's not raw material consumption. So first we created a ledger. When we created this ledger, we updated these two tables. It is SKA1 chart of account segment. Here the chart of account is MA10. Okay. And you can see so many ledgers are there. This is chart of account segment. So many ledgers are there, SKA1. Similarly, the company code segment is also there, SKB1. Again, here also so many ledgers are there. Now, if I will run the cost element report, you can see how many ledgers converted into cost element. See, CSK, chart of account segment of the cost element. Only two, right? Ledgers we have so many ledgers are there, but cost element point of view, only two are there. This is your chart of account segment. And if you'll see the CSKB, controlling area is MA10. That is also only two. That is controlling area segment. Okay, so ledgers are different, cost elements are different. Maybe you are saying that 1000 we have created as ledger, here also 1000 we created as cost element, both are same. But when we are reporting one GL report, FBL3N, that time the data is going to pick from this by using the GL data. Maybe number is same 1000, but it is GL line item. Okay, or if you are going to check any document in FB03, there you have the GL entries there, the GL is there. But if you are going to check any cost center report, or let's say if you are executing a cost document, case B5, there you will not find the GL entry, you will find the document. Okay, let's take this example. So let me see what is the document we have posted here related to this. This is okay. This is one document we have posted, and in this is a FI document, FI transaction, and we have included here 1000. Now 1000 is what? It's GL. So in document number 49 series, it is updated as GL number. Now in this document, there is one CO document is also there. Okay, so let me check what is the CO document. It's already integrated. So the CO document is 1. Okay. KS B5. Document number 1. Now it's not GL. Don't confuse with the number. The same 1000 in both case it is there. So, but it is not cost element. Nowhere it is written as GL. It is written as cost element. That means from controlling point of view, we are considering this is cost element. From GL point of view, we are taking this is GL number or account. But these are the different things, because we can see the system is going to take the data from different table. Okay, one from in posting point of view also, this data picked from BSEC table, and from this data from COEP table. So it's completely different concept. Yes, maybe you will say, why then we are repeating the same information, we are adding in two different tables. That is true. So that's why these things are simplified in S4HANA. In S4HANA, there is no concept of separate cost element, both primary and secondary. It is merged with GL. But right now it is two. Got it?
Yeah, thanks.
Yeah. In our session in future, we will see. So as you raise this question, yeah. Hello, yeah, Anand.
And cost centers. So, cost center?
Not getting your question. Repeat it once again.
Like you told us that cost center is the higher granularity. Means you can say it is the superset of business area or controlling area.
Business area separate concept. Cost controlling area separate concept. When we are taking the hierarchy, so this is your operating concern. After that, controlling area will come. Then after that, company code will be there. Business area is nowhere it is. Business area we are creating, it's independent. The SAP, if you check the SAP material, they have given this business area, it's independent entity. This business area you can link with controlling, that means in cost center you can add with company code, even you can add with plant, you can add with the in SD point of view when you are defining with the sales office. So in multiple area you can add this. So that is not coming under the organization structure. So everywhere we have option. Okay.
Yes, yes. Okay.
See here, if we'll go to check this one. Business area created client level. Now go to here in when we are defining the business sales area. So here we have option, we can add the business area with combination of plant and our division. This is one we can assign. Then when you are going to define, Sales organization also, we are assigning the business area. So business area independent. Everywhere we are just adding. Similarly, when we are creating the cost center, there also we have the option, we are adding the business area. So for example, let's say, what is the cost center? Let's say this is one cost center. So here you have the option. You are also adding business area. So business area is nowhere it is coming in the organization structure. It's independently created, and as for your requirement, you can add with any of the units. Fine.
So technically, we can say that business area is cross-client and organization structure is a client-dependent, or it is illogical to say like.
Business area, what you are saying? Business area is
Cross-client.
Cost
Client.
I'm not getting
it. Client dependent.
That business area, why we are fixing it with the cost? Because when we will define the
cost client.
Can you spell it out? Cost?
CROSS. CRO.
Okay, cross plant. So can you please type it for me in chat?
Client.
Cross client. This one. Hello.
Okay, Pradeep, I have to go. I'll see you tomorrow. Okay.
Yeah, we'll see tomorrow.
Thank you.
Okay, bye.